Hello everyone, this is Cris and welcome to Crilex Trading. Hope you're having an amazing trading week and thank you for being here. As you may know, me and Alex are FTMO funded traders, and in order to pass the challenge in the verification and as well now in the funded account, we are using a 5-minute strategy which requires a lot of your time and attention. Therefore, for the periods when we will not have so much time available to spend all day near the charts, we are trying to find and refine also some higher time frame strategies. So today I would like to share with you a strategy that I'm going to backtest in the next period. Actually, this is a strategy that we used to trade some years ago, but due to lack of discipline and poor management, we were not able to be consistent with it, and actually we were not able to be consistent with any other strategies. So now, after a few years and some blown accounts, with a total different mindset, discipline and improved risk management skills, I would like to give you a new chance to this strategy, so let's move on. In today's video, I will talk about an RSI divergence strategy. Divergences are some really nice confluences in trading, but you cannot just use them as they are, but you have to introduce them in your strategy in order for you to have a clear entry point. First of all, for this one, we are using the 1-hour time frame, 3 indicators, RSI, stochastic, and the 200 EMA. In order for us to dive into this strategy, I have to explain you some information regarding the RSI and divergences created on this indicator. It is very important to understand the divergences because they will generate our entry signal. So usually when the price is heading to one direction, the indicator is going to the same way, as we can see here. The price formed here higher highs and the RSI created also higher highs. However, there are also times when the indicator is moving to the opposite direction of the price instead. As we can see in this example, the price made lower highs, but the indicator made higher highs, and this is called a divergence. There are 3 types of divergences: regular, extended, and hidden divergences, but now I am going to present you only the hidden one because it's the one we will going to use in our strategy. So the hidden divergence is signaling us a possible trend continuation, and there are 2 types of it. The bullish hidden divergence, which is formed when the price is making higher lows, but the RSI shows us lower lows, as we can see in this example. This tells us that there is a possibility for the trend to continue to the upside. The bearish hidden divergence is when the price is making lower highs and the RSI shows us higher highs. This predicts us that there is a possibility for the trend to continue to the downside. So now, knowing this info regarding the hidden divergences, let's go to the charts and see how this strategy works. Okay, so as I previously said, for this strategy we will use 3 indicators, and I will add them right now on the chart. First of all, the first indicator used will be the RSI. This will be used in order for us to spot the divergences. The second indicator used will be the stochastic, and it will help us for the entries. And here we have to change some inputs because at this percentage of smoothing, we have to add 3 instead of 1. Okay, and the third indicator used will be the 200 EMA. I will just customize it now with the value we need here. Okay, so this is the setup, and now we will look only for bullish divergences when the price is above the 200 EMA, as we have the case here, and of course when the price is going down below the 200 EMA, we will look only for bearish hidden divergences. Now, as an important remark, we cannot just take a position when a divergence is formed because it doesn't guarantee us that the price and the trend will continue. As you can see here, we already have a divergence here. This is a hidden bullish divergence because, as you can see, the price made some higher lows, but actually the RSI made some lower lows. Okay. So that's why we will use the stochastic indicator here that will further confirm our analysis. So now let me explain you some trades in order for you to understand how this strategy exactly works. So for the buy positions, we have to check the next conditions. First of all, again, the price should be above this 200 EMA. The second condition is that on the RSI we have to search for this bullish hidden divergence, exactly as I marked it before, right here, between these two swing lows and these lows of the RSI indicator. And once we've spotted the divergence, we will need the stochastic to confirm our signal, meaning that the stochastic should be below the 50 line. I will just add the 50 line here in order for us to have a clear image. Okay. And then we have to wait for the stochastic to cross to the upside. You should not rush the process and take trades if the stochastic is not crossed, exactly as we can see here, because you risk to have an entry too early and eventually the price will go to the direction indicated by the divergence but without your position. So let's wait for the stochastic cross. Okay, and here it is our stochastic, and once we have this instance, we will take a buy position. Okay, I will add the position right here, just on the close of this candle. And for the stop loss, we will set it a few points below the current swing low. So this is our swing low, and I will adjust 3 pips right here. Okay, and for the profit target, we can target the next important resistance area, or also for targets you may use as well fixed risk-reward ratio. As I see in many videos on this fixed approach, many traders choose a 1:2 or a 1:3 risk-reward ratio, so it's up to you how you will choose the target points. I will just add the 2:1 target point right here, and let's see how this position will play out. Okay, and here our take profit was hit. Okay, let's see now also the checklist for a sell position. Let me show you an example here. So, excuse me, here I think we have the next 3 conditions. So the price should be below the 200 EMA, as we can see here. On the RSI, we're searching for bearish hidden divergences. And let me check if we have any divergence here. Yes, we have it, because here the price made some lower highs, but actually on the indicator we can see that we've got some higher highs. Okay, now once we have this instance, we need the stochastic to be above the 50 line and to cross to downwards. Okay, and as we can see here, actually the stochastic has not made yet the cross to downwards, because the blue line has to be below the red one. And actually the correct stochastic cross was made right now, as we can see here. So now I can just place a sell position on the close of this candle, and again stop loss will be 3 pips above this most recent swing low. Okay, and again for the take profit we have the same instances as stated a few moments ago, target based on zones or fixed risk reward ratio. I will just add a fixed risk reward ratio, but if you want to target zones, you have just to zoom out a little bit in order to check the next important zones that the price may actually hit. And as we can see here, this is a quite important resistance zone, and the price I think will go to the downside just near this zone in this nice downtrend formed here. Okay, let's see how this position will play out. And actually, as you can see, the price just hit our take profit and also just broke this important level, meaning that the price is trying to make a new lower low. Okay, so that's it also with this sell example. In the next days, I'm going to backtest this strategy on some major pairs, and I'm going to revert with a new video for the results, and also I will present you my remarks and opinions for this strategy. Also, we will revert soon with some updates regarding our FTMO funded account, risk management, decision, and of course the results. Thank you all for watching. Don't forget to like and subscribe, and if you have any other questions, feel free to write them in comments or DM us on Instagram. You can find the link in description. See you in our next video, and of course, until then, trade safe and trust the process.